What's up, traders? And today I'm going to break down SPY by the 30-minute. I'm going to show you something you probably haven't seen, guys. Check this out. So we're going to look at Monday. We had an $8.14 rise on SPY. And then on Tuesday, we had a almost $6 drop. And then today, we had a $3.95 rise, guys. And then what happened? We went down for a little bit. But what I want you to see, guys, is look at this trend right here. Okay. Yes, right. We are in a downtrend. If you haven't noticed that, and something big is coming. Doesn't matter. This is my opinion. Doesn't matter if they make a deal with Iran. The market is going to pop, and then guess what? You are still in this channel. Now, if you're a day trader, I'm going to recommend that you always look left. Go check out the bigger time frames. Check that out. We came here at 604, came down to 595, back up to around 604, guys, and look at where we're at again. Are we going to bounce here? That's the hope. So even if we bounce and we get good news, okay, it's got nothing to do with the stock. The stock is supposed to bounce here. This is a decision point for SPY come Friday, because remember, Thursday we are closed. Now I want to give you guys a different look on SPY so you can see the common areas where they find support, guys. So there is a formula here that they use, and using your regression channel, you will be able to tell when they're going to bounce back up. Okay. Now, if you know regression channels will tell you if it's getting bearish, which is the bottom part, or bullish, the top part. What you want to see is you want to see them pop out, and you can tell. Look at this. They've had 1, 2, 3, maybe 4 tries. Here they had 1 try and they just went ahead and declined, guys. But there is a lot of rejection here. Okay. And if you force me to play or trade SPY, what would I buy right now? I am going to buy a call, guys, and I'm going to tell you why. Look at the pattern here. They are protecting this area with all of their might. Okay. And every time they come in here, guess what happens next? Bang, right? Bang, they take off. Any support they've had, bang, they're taking off. So for Friday, I already have some calls, guys. I know it's triple witch day. Okay. But I still buy calls. Don't buy anything for Friday, guys. Everything's going to expire that day. You want to buy a little bit of time, so I recommend you get something that is 7 days out. So we are super bullish right now, and I'm going to show you 2 more things that tell us that we are super bullish, guys, and you're going to love this. Check it out. Okay, and you can go Google this if you want. We actually have a triple bottom, which means what? That means that the sellers are exhausted. They don't want to sell anymore. They're done. And we are starting a new trend up. And guess what? We should see a pop. Okay. It doesn't matter the news. Okay. They can say, oh, we have peace in the Middle East. Okay. Good stuff. But we have found a bottom, a triple bottom, and we are establishing support. That is the second reason. Let me show you the third reason, and this is the reason you might want to go a little bit extra long. All right, so I'm going to take you through a little tool called Fibonacci, guys, and Fibonacci says that when we go to the top, okay, from a new bottom, we're always going to retrace 50% of what we traveled. So does this one meet that actual definition? Let's mark this off. So If you're a trader, you want to learn these things. Okay, look at that right there. Okay, so we have a 50% retracement on that first Fibonacci. Now, since we have a new bottom, we will start the Fibonacci at the bottom here, and we're going to take it to the new top, guys. And that top was right up here. Okay. And Fibonacci says the key levels for retracement are 38, 50, and 61%. And you guys can see we entered into the 38, which again, Fibonacci was correct here. Now let's do the next one. We had a bottom here, and then we had a new top. And I'm going to stretch this out just a little bit so we can see these lines, guys. Check it out. Okay. Was Fibonacci correct? From this bottom, we got a top, and we retrace into the 50% area. So yes, Fibonacci strikes again. Let's look at the next one, guys. We have a bottom. Okay, we did this one. So we have a new bottom here. Okay, and then we have a new top there. And check that out. Was Fibonacci correct? Let's mark this off. We have our bottom here, and we retrace down to almost the 61% area, guys. I mean, these are bullish patterns. Now, let's mark the next one off, guys. So we have a new bottom here where Fibonacci striked, and our new top is up here, and we had retracement. And look at that. I mean, they do not hide this from us, okay? When the market is moving, they do not hide it. Sometimes the moves are big. Sometimes they're small, guys, but look at that. Fibonacci was correct again. Now, let's take the next one. New bottom, new top here. Check that out. Where did they retrace to? And these are the things that I teach, guys, in my courses. Okay, you do this homework, you are going to have an amazing time in the market. You're not going to panic. You're going to buy and understand where the stock is going to come back to for support so that you can buy without even thinking about it. Check it out. We got to the top. We retraced right into the 50% area. Remember, we are looking at 38, 50, and 61%. So now we have a new bottom, and Fibonacci will be marked off. We found the top. We started to come down. So let's just mark that off. And where did they come down to, guys? Check that out. Okay. They went again to the 50 and 61% area. I'm telling you, this is not hard, guys. This is not hard. You just need to understand how to do this. Now, these are all bullish patterns. Look at this, okay? From the bottom, this is what they've been doing, and they don't hide it. Every single move up, guys, has been an actual bullish move. What do we have next here? We might have, like I said, a triple bottom. Okay. Now, if you look at just these two areas here, okay, we have a double bottom, or do we have a double top? Now, how do we figure that out? Very simple. You take my courses, guys. This is what I teach you. We draw the line there, and we draw a line here. And this is what we call a neckline. Once we measure the neckline, our implied move will be the actual length or height of the actual, I call it the little tunnel, Well, you guys can see what I'm talking about here. So if they went back up and they break this neckline, we're going to 612. If we break the 597, we go to 589. Which one do you think we're going to get, guys? So this will be a move of $7. And the top neckline will be a move of $7. Now, does that look confusing? Absolutely not. However, what are you going to play in the meantime? Well, Fibonacci tells me this has just become a really nice support area, guys. And if we look at this, okay, news can knock this down, okay? Don't get me wrong. I keep telling you it doesn't matter. It does matter. It's going to knock it down. It's going to be a detour for a temporary time. But if the stock is supposed to fall, it's going to do it. But if it's supposed to go up and up, yes, it's going to do it. And you can see anytime that we've chopped across, okay, all you have to do is go back to your stock and check it out. What does it always do? Okay. And I will show you right in here. Look at this. We had another chop week in here, if you want to call it that. And guess what happened after that? And then we started consolidating here. People call it chop. I call it consolidation, folks. And we went up. We went up. Okay. You had consolidation here. And then we went up. Okay. I'm bullish right now. I think that we're going to continue to go up. There's a lot of stuff that can affect the stock, but remember, it's a detour when it's news. If it falls big time, I'm going to love that because I'm going to buy the dip, guys. And this is the last part. I'm going to show you. If you've stayed this long, you're actually getting a free course here. Remember the last time everybody got scared and the market started to panic for so many different reasons. And we went down $130 on SPY, guys. And then guess what happened? We've gone up $124 since that drop. Now imagine that if you knew that we were going to go up $124 on SPY, would you buy at least one call that expires in 30 days, 60 days, and take advantage of that? So when we get an actual drop, that is a good sign. If you're a bull, if you're long and you want to make money, guys, okay, you got to go to TradingView. Has so many cool tools, guys. Go get you a indicator that tells you when we are at a very bottom so that you can enter your trade with confidence. Okay, this is what you need. You need tools and you need to understand bullish patterns. You can't go wrong, team. Okay, now as always, if this video has added value, guys, do me a favor, subscribe, hit the like button, and if you want to know when the next video is coming, then hit that little bell so you get an alert. Okay, I will continue to try to add value to you guys because this market is getting a lot easier and a lot more predictable. And when we have tools, okay, it is super easy to understand what to buy. See you on the next video.